Wealth Project in the summer, and we've been doing podcasts. We've been just thinking about this event for a couple months, and I'm so happy with the turnout that's here. I mean, we need more chairs, I guess, but I'm really grateful to have you guys here, and I know that we're all going to build wealth together, and I want to talk about. Does this thing not work, Shawn? No, I got to turn it on. That's part of it. There you go. So let me talk about what we're going to talk about. Who's going to talk today? So you got me. I'm talking about where we're starting and where we're going. Steve Seymour is going to talk on investment strategies to build wealth. Ed Fordyce is going to talk about why we're doing this, I think. And Shawn Connors is going to help you make a plan, an action plan. One of the big things about this and what all these things are to do is to get you into action. Because without action, nothing happens, right? We can go here and sit and learn every tactic there is in the world and think about it all the time. But if we don't go into action, that means nothing, right? So the goal of this project is to build $100 million in net worth over the next 5 years as a group. So everybody around you is supposed to help you here. So turn to your neighbor and say, I want to make you rich. I want to make you rich.
Thank you so much.
All right. Settle down, everybody. Settle down. So this is a collective and a collaboration between everyone in this room. So I'm a realtor, I have a real estate team, and we are focused on helping people build wealth through real estate and getting people into action. But you don't have to use me. It's not about me. It's not even about the brokerage. You can be an agent at another brokerage. It doesn't matter. This is just a collaboration. This is a purpose. So I was at a CEO training a couple days ago, and they said to me, are you a purpose with a business or a business with a purpose? And I think we really want to be a purpose that just happens to have a business, right? So the purpose is to help people build wealth through real estate in their lives and achieve financial freedom. And there happens to be some businesses around that, but this is outside of the business, this is above the business, if that makes sense. So everyone's helping each other. So one thing that you can join, and you can take out your phone right now and do it. It's the Philadelphia Wealth Project on Facebook. So make sure you join that. You can ask questions in here like, hey, I need a guy to do my roof. And JD Batal does roofs. Actually just did a roof for me on one of my rental properties and it was awesome. So, but you can come in here and be like, I need a drywall person. I need this. I don't know what to do with this. I need money, whatever it is. So get connected on Facebook in here. And that'll be, again, a part of everybody helping each other. So when someone comes up and has a question, you can answer it. I've got a real estate investing YouTube channel that is focused here. Shawn also has one. And you can subscribe to this on YouTube. It's called Investing in the Philly Burbs. And I make videos every week just talking about investing. And you can watch my projects. As I'm going through them, I do a bunch of shorts and different things. The Philadelphia Wealth Project, we have a podcast with that, so we've done a couple episodes, and you can follow along with that as well, just to kind of educate you. I mean, there's a ton of education and podcasts out there, but the thing that's good about this is it's locally focused on our area. So we'll be talking about local issues and local things, so it's not just national stuff like everything else. And then me on Facebook, so this is the Rob Lawrence team. So we have we have a meetup the second Wednesday of every month. So the next one's going to be on December 14th, and we've got Rob Caldwell. He wanted to be here today, but he had the flu. He manages 3,000 units, and he's going to be talking on renovating to what your rental purpose is. Those meetings usually I starting at 6:45. You grab a beer, you have some food, and there's usually an hour and a half talk and a lot of networking. But the nice thing is we're not just meeting today. We can meet every month. to get together in community, because this is really, again, about building this community and building each other up. But I'll be posting on the Rob Lawrence team on Facebook all the events, as well as sharing them in the Facebook group for the Philadelphia Wealth Project. So that which is measured improves, that which is measured and reported improves exponentially. And this guy named Carl said that. I don't even know who he is, but I found this on Google. So, so why track your net worth? So when you make a move, when you do something, when you're buying a property or you're buying a car or you're buying anything, are you thinking about how is this affecting your net worth, right? If you have a goal that you're trying to move towards, you know, you should be able to put that in a spreadsheet and be like, okay, I've made a positive move in the right direction. And I also do future projections, which I've seen done, but I do it very detailed. And I'll show you guys a little bit about that. So what is your net worth right now? So net worth is assets minus debts. So assets are things that you own and they have a value. Debts are money you owe to people. And so what you have minus what you owe is your net worth. So assets can be your home, rentals, cars, boats, IRAs, stocks, gold, possessions, businesses, etc. Debts can be student loans, mortgages, credit cards, lines of credit. You guys get it, right? All right, so figure it out. Who needs a piece of paper? So this is a workshop, guys. So I want you guys to take 5 minutes and do this, because we have to report this, because we're taking our starting point. So if you can say, hey, my house is worth this, anybody need pen, some paper, you guys? You guys, paper? The thing is just a one number thing, so. All right. Do you guys need some help going through this? Maybe I just dropped it on you. All right.
Thank you. You want that broken down to the penny, or?
It's just, yeah, I mean, if you're in with $100, that's fine. So, yeah, so think about like your house. How much is your house worth? What's your mortgage balance on your house? How much is in your checking account? How much is in your savings account? How much is in your IRA? If you don't know these things, it's important to think about. You might be zero, right? That's okay. And I'm going to show you guys my journey. But yeah, I want you to figure this out. I started out with nothing and I still got most of it. This is me. So I've been tracking my net worth since I graduated from college in 2007.
Wandered in the desert.
Yeah, I did. I did wander in the desert. So, and I wanted to share this with you guys because I wanted to let you know this is not a straight line. You know, this did not just happen in. Yeah, I went to Cornell University for mechanical and aerospace engineering, all the potential in the world, and then this is what I did for about 10 years, right? And yeah, I remember reading the Bible and they'd be like, you know, Moses wandered in the desert for 10 years or whatever. And I'm like, how's that possible? But I did it in my own life. And basically I got married and just wasn't the right fit for me. And we ended up $100,000 in the hole. And I didn't have a very good strategy. I didn't know what I was doing. I thought I was financially educated, but I wasn't. Someone told me to buy real estate, and then I was about the end of the advice that they gave me. So I bought a piece of real estate. I lost money on it. I got divorced, and I started off with nothing again right there. So nice thing about when you get divorced is you get to tell everybody what you have, and then they take all that till you don't have anything left, and then they let you sign the fucking paperwork. But you know, in this point, I got licensed, and I got reintroduced to Steve Seymour, who's going to be speaking today, and he's my mentor. And I feel emotional about this. I joined VRA here, and I started coming to these Friday meetings and these masterminds. So my mindset needed so much work. I don't know why I'm still holding this. My mindset needed so much work, and Steve taught me a lot about not being a victim because I felt like a victim here, right? Oh, this woman did this to me and blah, 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 blah. You know, poor me. And it took a long time, but I met my new wife, Marie. We have 2 beautiful children now. We have 4 houses, 2 cars, and yeah, it's unbelievable. And I'm super grateful, I think, from having wandered in the desert for a long time. So here's where I got married, and then we just kept working, saving money, kept saving money. And then we bought I went full-time in real estate here in 2019, and we bought our first live-in flip. And Steve came to my house and talked to me about what I should do and shouldn't do and helped me do with the design and stuff like that. And on this live-in flip, I'm up about $270,000. So COVID hit right while I was doing it. That was fun. And it actually gave me some time off. I couldn't show houses, so I'm renovating that house. Then about a year later, my wife was like, hey, I really want a place in Florida. And I said, well, we're not rich. Like, I can't just buy a place in Florida, you know? Like, I just got out of debt, you know? And then I talked to Steve, and he goes, you can't afford a place in Florida? He's like, how many nights a month do you have to Airbnb it out for you to be able to afford it? So then I had to go home and tell my wife she was right. And I don't know if you ever had to do that. It's really hard. But we bought a place in Clearwater Beach. That place has appreciated $180,000 in 2 years. So my wife was right. She's awesome. I am so blessed to have her. In May of this year, I ran into a distressed homeowner who was going into foreclosure. I bought their house for $135,000. I rented it back to them. I cleared all their debts. I gave them a low rent, but I purchased it for $135,000, and it appraised for $255,000 6 weeks later. And then Jason did the roof. So, and then now we're doing a project in Westchester we just bought for $450,000, and we're hoping to put about $60,000 into it, and I think it'll be worth $675,000, maybe $7,000 if I do a really nice job. So that's another $200,000. Now, I think the interesting thing is you can't really save your way to this, but you see what's kind of happening for me right now, right? And I just say fail, you know, this is a common saying, right? Failing to plan is planning to fail. So if you got no plan, what are you doing? So this is another thing that I do with my net worth projection. So I'm looking up to 2035, and I do this annually. Like, so I'll say, okay, in 2034, I'll be this much, 2035, this much, and I'm right here right now, okay? And you can see the curve. So it's like, okay, can I keep doing what I'm doing? So my goal next year is to do 4 more properties. In 5 years, if I do what I'm doing, I'm just looking at the math. It just becomes simple math, right? It's not a pie in the sky dream. It's like, what actions am I going to take to get to this point? And so my 5-year projection is at $5 million. So hopefully I can put $4 million towards the project. So I want you guys to take a number. So everybody's going to get a number, and this will be your secret number. I won't know what it is. You're going to access a spreadsheet, and you're going to report your net worth in there. And you're going to report your net worth every quarter. So we need to know where we're starting as a group, because if we're going to build 100 million, we need to measure this. If we don't measure it, it's not going to happen, right? But again, I don't know who everybody is, so it's private to you, but we can see as a group how we're doing and how we're performing. So this is a spreadsheet that I use. I'll share it with you, but everything's a date, and then it calculates, and then these are all my assets, and then over here is all my liabilities, and it just subtracts what's here from here, and you can see your mortgage pay downs and stuff. Now, obviously, I'm a nerd, okay, because you can see by the spreadsheet, all right, and the glasses. But this is the easiest way I've found to track it. It's like a personal financial statement, and I've tracked it every month for 15 years. When I was not doing well, it was hard to look at, I would say. But I'm looking forward too. Okay, what's it going to be in January? What's it going to be in May? I look forward to make a graph. So, any questions on that? What do you guys think of that? Is that something you're willing to do?
It's a lot of work.
It is a lot of work. Being poor sucks, though. It sucks a lot worse. Yeah, I just think if you don't track this, you're not going to make decisions around it. And you're going to say, I want to be rich. Like who, everybody says, I want to be rich, right? But if you're not actually making a plan and you're not actually looking at the numbers and you don't actually know what that's going to look like for you, it's just imaginary, right? So I just want to talk quickly about passive income. And I think it's kind of a funny term. Because if you ever had, how many people in here have rental properties or had rental properties? How many of you feel it's passive? Absolutely not, right? Which is funny because if people say, I want passive income, I'm going to become a real estate investor. And I'm just like, I mean, even as a lender, you still got to get your paperwork together and, do that kind of stuff. So, I mean, you're going to be doing something. I mean, if you buy a REIT, maybe it can be truly passive, but I just don't think it is most of the time. But I think maybe we should call it income from assets. So if you're thinking about your income from your assets rather than your income from your job, I think that's really what we're looking to achieve when we really break it down. Like, what are income from assets? For me, right now, it's about $2,500 a month. But it's definitely not passive. I definitely work. How many people in here know what their passive income is right now? Yeah. You guys thinking about that? Is that something that you're thinking about? Okay, cool. I mean, probably for many it's zero, which is okay, but it's just something to think about, right? Like, it's just like, what are we leaving our families with? That kind of thing. Like, how much freedom do you have, right? And the more passive income that you do have, the more freedom you're going to have. So you may want to track this as well and think about your financial freedom. So if your passive income or income from assets exceeds your expenses, whatever your expenses are, then you're in financial freedom, right? If you don't go to work, it doesn't matter that day. But it's not easy to accomplish this because you know why? Like, when you say, oh, my expenses are $10,000, and then you get $10,000 in passive income, what do you want to do?
Make more.
Get a job.
Make more, get a job, spend more, right? You think something's going to be enough and then it's not, right? But I think when you love what you do, like if you're doing what you love every day, I think that's maybe real financial freedom. It's a choice to work. It's a choice not to work. It's a choice to choose your passion and what you want to work on. Steve and Shawn and I and Ed, it's like we're all thinking about freedom and security, for ourselves and the people we love. So my 5-year. So this is what I'm talking about with projecting this, and you may want to do this yourself. It's not necessarily something you have to report to me. But just say, okay, in 5 years from now, how am I going to have $5 million? If I'm going to have a $5 million net worth, is it going to be cash? How many people think it would be cash? How many properties are you going to own? Right? How much are they going to be worth? How much debt are you going to have against them? How much is going to be in your IRA? How much is going to be in your savings account? When you break this down, I think this is like a visualization technique for nerds like me, but it's a visualization technique where you say, okay, like, yeah, I want to have $5 million. It's like, that's great. Well, what do you mean by that? Well, I want to have 10 rental properties with 50% equity, and my debt payment down is this, the passive income coming off is this, I need to have this much cash buffer. Because when you do break it down like this, you actually know what you want, right? Like if you say, because saying I want $5 million or have $5 million net worth, we all know it's not going to be cash, right? So what is it going to look like? So I just want you guys to take a second to think about where you guys want to be in 5 years from now, right? Like, you're all here because you want to be part of the Philadelphia Wealth Project. Together, we need to get to 100 million, okay? So what do you plan on contributing to the project? So I guess write down your number, you know? It doesn't, you have to show it to me, but, you know, go ahead and take a second to think about that. By the way, I think I need at least $1 million out of each one of you. All right, so don't shoot below that, please. Yeah, I definitely need your guys' help because I'm probably not going to get to 100 million myself. Maybe. So my goal's 5. So I told you guys that. I'm at like 1.2, so that's 3.8 more. Everybody got it? Cool. So think about what you'll own. How are you going to be worth that? What do you want? You can write it down. I suggest writing. I would say, yeah, think about what you want to own in 5 years and what that looks like for you, because money is just a measure of whatever you've done. It's not an actual goal, really. Money's just a measuring stick. Money is imaginary. They print it, right? In real estate, you can print money, which is cool. I've been thinking about that, you know? Like, I buy a house, I renovate it, some guy comes over with a piece of paper and writes this worth $700,000 down, and then the bank gives me $200,000. But I never sold my property, right? I just printed $200,000, basically, out of thin air. No money transacted. The value of my house has been created in someone else's mind and someone else's perception, right? So it's just kind of interesting what you can do with real estate. So think about what you'll owe on your properties or any other assets you may have. You know, if you want to own your properties free and clear, do you expect to have debt and be leveraging? I personally like leveraging. And think about what your goal for passive income would be for yourself. And you can write that down. How much per month? And then I guess another question is, will your assets then provide that? So does your plan make sense? Does what you want make sense? And does it add up? I'm very much on measuring things, obviously. I'm very much on thinking things through from a math standpoint, because money is math, all right? It's not hard math, but it's addition, subtraction, it's hopefully multiplication. So you're going to have access to a Google Sheet that you'll update the first day of each quarter. I don't know. I guess, Shawn, when you pulled this, I hadn't updated it.
QR code?
Yeah, the QR code. Guess not. Okay, so there's a QR code on a piece of paper, so you can pass this around maybe. And I did print it out. So I'll pass out a couple of these to you guys. So if you scan this with your phone, that's going to give you access to the spreadsheet. And you can bookmark this page. All right, let me grab one. Here's that one. I didn't bring off. There you go. Hi. There you go. Yeah, just pass it around, I guess, and you could bookmark that sheet.
Thank you.
You're never too old. You're never too old, right?
Okay.
That's what I think, Frank.
I talk loud.
That's
I
okay.
can't hear, that's why I talk loud.
It's fine.
Oh, I know, I'm still doing it.
You didn't make fun of me, at least, and
Oh, no. No. I've been doing it for like 40 years now, so.
yeah. So I know you may not have been able to calculate your net worth yet today, but maybe you have. If so, find your number in a spreadsheet and put it in. Perfect. Well, I'm running ahead of schedule, guys. Yes?
Am I able to edit this number? Because I'm just guessing what my starting number is.
You are. Yeah, so if you want to go home and calculate it in more detail, you can edit it. But the main point, guys, is just we're getting a starting point for a group. And yeah, I don't know that I've really seen this concept done before. What do you guys think of it? Is it cool?
I like it. Helps with the goal.
Goal setting is huge.
Keeps you accountable.
Mm-hmm. Yeah.
So you're saying write our number on the...
Yeah, so you see like that number that you pulled? Find your number in the spreadsheet.
Right now is in view only, so we'll just have to update that.
It is? Jeez. I put it in view. Is it not working for everybody or anyone able to update it?
It's just view only right now. It's fine, we can edit it.
Okay, just bookmark it. I'll fix it while we're at the break. All right, cool. Well, everybody, let's take a 15-minute break. You can kind of, I'll fix the spreadsheet so you can actually edit it. And then after that, we'll welcome Steve. All right? Yes?
I couldn't really see your spreadsheets, but
Yes.
could you maybe post a blank copy of your template?
Yes.
The YouTube or the Facebook?
Yes. So I have both a video on how to fill it out and I have the sheet itself. So I'll share that sheet with you and you can just download it or share it to your own drive and then fill that out. So,
We can also,
absolutely.
we can also email the entire presentation to you guys too. We will do. We'll do that.
Yeah.
Yeah, what you're doing.
Don't share my personal financial information with the people outside this group. I'm a little vulnerable with you guys here because you guys chose to come today. And I do appreciate that.
Thank you, guys. So I'm going to do something a little different. Questions first. What do you guys want to know about real estate investing strategies? Just spout them off because I want to make sure I cover everything during this.
40 grand, what's my first step? $40,000.
40K to invest?
Yep.
First step. Okay. What else?
Best place to find the money.
Find money. What else?
When should you buy?
When?
Yes. When's the best time to buy?
Is that Susan? Is that Susan back there?
That's Susan back on.
Creative
Contractor.
financing.
There's a reason.
Residential or commercial?
So you guys came out here. I'm sure you could be doing something more fun. What do you want to learn?
Commercial versus residential.
All right.
Contractor. How to find contractor?
I can't really write, but
Going for like multi-units versus, let's say, single family.
just comparing them.
I guess for the area. I mean,
Okay.
How title companies and real estate attorneys play a role.
Okay. Is there any more specifics around that? Just
Essentially, when it comes to like real estate investing and wholesaling.
wholesaling. Okay. All right.
And like kind of how to scale that into like a respectable, profitable business.
Okay.
Factors to be considered, such as if you're thinking about traps. So
Traps.
zoning laws, anything from a commercial versus residential standpoint, especially commercial. What kind of are the pitfalls that most people don't consider that you need to, and if you don't and it's too late and you're looking back, what are those things going to be? Are you going to buy a plot of land because you wanna build something there, but then it's too little too late when you look back and realize you're gonna have to do the work to rezone it. Maybe the local laws aren't even gonna allow for what you're looking for in the first place. Now you have this thing, you have to get rid of it. What do you do? So thinking ahead and looking behind, if you have a list of things that you.
That's a simple question. No, I'm just kidding. So I'll just say highest and best use, right? And then feasibility, and maybe some risk analysis.
Thanks.
Okay.
Financing tools, like what you like to use, like flip and fix loans, like DSCRs, using your own money, using home equity lines of credit.
I'm going to kind of, between find the money and creative financing,
Okay.
touch on those.
Owner occupied, duplex, triplex?
So like house hacking?
Yes.
Okay.
We're gonna need a couple hours, right?
No, I'll blow these pretty quick.
How to form partnerships.
Okay. All right. Did you have one, Patrick?
Yeah, mine's kind of similar to the partnership. Like, is it worth it to create an LLC, or like, it's better to be sole proprietor?
Okay.
Financing that on a tax basis.
So it's for the reason you're asking is for taxes,
Yeah,
not for asset protection.
it could be either, but I'm more curious about tax wise.
Okay. I'm going to just kind of blow through these real quick, then we'll get started. And then some of these I'm going to touch on in the slides, but some of them I'm just going to answer right now. So Ed, for 40K to invest in the first step, I would say the number one rule that my mentors told me, invest in what you believe in. So I know that's broad. Hopefully with this, it will help shape some thoughts around what you believe in more. And then, you can take that and we can dive deeper one-on-one. But you should look at, are you looking short-term, mid-term, or long-term with that money? And then are you looking for tax advantage or non-tax advantage investments? So if you kind of break it into those categories, that'll help, along with what I'm going to talk about now. Where to find the money? So Shawn Phillips, can you raise your hand? Frank, you still lending? You want to? So there's money everywhere. Every single person in this room has money. You could borrow from them. You could go to someone like us, who's a mortgage broker that helps specifically find investors financing for their deals. We have fix and flip loans. We have debt service coverage loans. We have, Shawn, you want to just spout off a couple different products?
In terms of investing, just the fix and flips, DSCRs, hard money. We have cash out on investment properties, HELOCs on investment properties, a lot we can do.
So depending on what you have, if you go to a broker, then we might have tons of different products, and based upon what you're looking for, could help you match with those products. And I'm definitely going to talk on that briefly too. But like how I got started was private lenders, and like Frank was a private lender. You've lent to me a ton of times, right? And I hope you're okay with me saying that, but I paid him back most of the time. He showed up today. He's got a bat outside, but no, I haven't seen Frank in a long time. But people like that believe in you, that are like, yeah, I trust this guy, knows what he's doing and going to make money. They'll lend you money. There's a ton of them out there that want to lend money because they're going to make money. When to buy? I'm going to touch on that with this graph over here. And then creative financing, I'm going to touch on in the presentation. Commercial versus residential. A lot of this is just your, going back to what I said with Ed, is like, what do you believe in the most? I've seen most people start with residential, and I think it's kind of safer. It's like easier to digest, because once you get into the commercial world, you have a whole different realm of asset classes where you could go into office space, industrial, because inside a commercial you have there's like a broader range of knowledge that you have to know, and then you have to become almost niche in one area to even understand it. To understand multifamily is different from understanding industrial. It's different from office. It's different from land development. It's different from, do you know what I mean? So it's a big question. I would recommend, if you're just getting started, start with single family rentals. And that kind of goes into your question with single family versus multifamily. I think you can go right to multifamily, and I'm going into multifamily, and I love multifamily. But I think there is something to be said to be able to like crawl, walk, run, or jog, run, sprint. You know, there's a progression. And the reason I like single families is because, let's say, if the market is maybe not exactly where you want it to be, there's more flexibility. Like, you could rent it, you could sell it, you could Airbnb it, you might move into it. There's a lot more options with your exits. And if you have multiple exit strategies, it kind of limits your risk initially, as well as if you want to pull out cash. So let's say, you know, for instance, if I need to get access to capital, I can go tap one of my rentals like an ATM, and I only have to put debt on that one property, versus maybe with a multifamily, it's going to be a more expensive appraisal, it's going to be a higher interest rate, it's going to be more hoops to jump through, you know. So if I need to get access to cash, it's nice to have those single family rentals in these different buckets that I can just, you know, pull cash if I need to get access to money. But with that said, there's economies of scale when you get into multifamily, and that's, you know, you can create massive amounts of wealth with multifamily. Most people that get really big are in the multifamily space. So that's kind of my answer to that. Attorney and title companies, it's very important to have the right attorney and title company. And if you're wholesaling, I don't classify this as investing. I can classify that as a business. So I don't consider that investing at all. But if you're going to wholesale, which I have done, you really just need to find a title company that's willing to do it. You can talk to us about it. Our title company will do it, but there's a caveat, and we could talk in more detail. Most people do wholesaling borderline illegal / definitely unethical, and most people don't pay double transfer tax, which PA Department of Revenue has clearly said that any transfer of equity, even if it's not a title transfer, the transfer of an agreement of sale to another person is still transfer of equity. It's equitable interest transfer, but they still want their taxes on that. So if you ever get audited and you go backwards, most wholesalers will be in trouble if someone really dug apart their deals and looked at the fact that they just paid one side of the transfer tax. And then, you know, obviously depending on the state, you have to have attorneys do the closings, like in Delaware. This is like a question where I would say you could dive deep on, but what I've found is it's hard to find an attorney that's great at everything. So you might have an attorney that's better with like helping you figure out business structure, and then you might have one that's better for real estate, and then you might have one that's better for like landlord tenant, and you might have one that's better for title. So you kind of have to find someone that specializes in whatever you're looking for.
Right, like the ethical part of it is like the biggest part, right?
Are you an agent too?
No, I'm gonna start getting my.
Yeah, so as soon as you're an agent, there's really no, in my opinion, I shouldn't say no. It's very difficult to ethically wholesale because you would just list the property.
Right.
You know, if you know what, going back to highest and best use and what's highest and best for them is going to be probably selling it on the market. There's certain circumstances where they don't want people coming through or whatever, and maybe you could find an investor buyer. But for you to go make a $30,000, $40,000 wholesale fee versus your commission, how is that going to look in front of a judge if they're saying, did you really work in your client's best interest? Even if they weren't your client, but you know, as an agent, how did that go down? Highest and best use for feasibility. So you kind of want to work with the end in mind. What's the end goal? And it's usually cash or cash flow, like whether or possibly value add. So, you know, if we could tear this down and build a 300-unit apartment building here, that'd probably be a better use than an office space. So you really want to start with what can you do by right, and with that you want to start with going into, if you just Google, you know, this is West Goshen Township, so you'd say West Goshen E-code, and then the code will show up. And well, first you actually have to locate the property on the zoning map. So let's say this is like C1 zoning or whatever for commercial, and it lists out all the uses by right. Well, you would go on the zoning map, look at the, the streets, figure out where your property is located on that zoning map. You can always call the zoning officer and verify that that is the most up-to-date map and that the property is in fact, because sometimes they change zonings. And then there's overlay districts, but in the E code, you can read the code and figure out by right what could you use it for. I've seen properties that are way misvalued by agents because they didn't do research, and someone could put up, for example, I have a property that, when I first got it, I could only put 3 units on it. Now you can do 6 because they changed the zoning. So that drastically increases the value. And then feasibility. So once you say, okay, I could build a 10-unit building on this property, what is that going to cost? So you start looking at feasibility, and you need an end performance. So you need to get market rents, see what all the rents could be when you have the finished product, and kind of back into that, and then see if your debt coverage is going to be, let's say you have $2 million in debt on that property. Can those 10 units support that, along with the taxes, insurance, maintenance, repairs, vacancy, management fees? So you have all these different fees. I know I'm going through a lot quickly, but trying to make sure I answer all these questions before I get started. House hacking is a great way. I love house hacking because you get to fulfill where you're going to live. You get to start building cash flow very quickly. And, it's kind of your first taste as being a landlord, but you're probably going to get sick of your roommates. And then you can just rent the place out and move into another one. But what I really like about it is you get that low down payment option to get into a house, whether you do FHA or just owner occupied, 3 or 5% down, whatever you qualify, VA. If you're a veteran, you get 0% down. You can get up to 6% seller's assist. You could get into a house for nothing, basically, and now have your tenants pay for your living expenses, which is great. So it's an awesome strategy. But what I like is when you move out and that becomes a long-term rental, you still have that same financing that will stay on that property forever. So you have that advantage of that financing. Because it's not always the deal. It's not always what you buy it for. It's what does that property bring in value in terms of rent and cash flow? And then what are your expenses on it? And by getting that owner-occupied financing, you're lowering your monthly expense for the debt coverage. Entities, taxes, and asset protection. So I recommend everyone initially just try to get houses in your own name, especially if you're a W-2 employee. So if you have a regular job and you're going to use that to qualify for a loan, most likely it's going to have to go in your own name anyway. If you want to scale and as you build, it makes more sense to have an LLC because now you're not capped out at 10 loans. So if you can only get 10 residential loans in your name, but they also base it on your debt to income. So I know I'm going through a lot, but you're going to only qualify for so much. But until you max that out, you might as well use that because you're going to get the best long-term fixed rate financing. You'll get 30-year fixed, lowest down payment, lowest interest rate. When people look at that for taxes, there's really no tax advantages for the LLCs. Real estate, the advantages are through depreciation and all your write-offs with your expenses, which is all passed through taxation. So even if you file an LLC, most people will do it as a partnership. If you have a single member LLC, it defaults to a sole proprietorship, which is the exact same structure as just being an individual. If you do an LLC elected as a partnership with the IRS, I feel like I'm losing people because I'm going too much, but that partnership could maybe have some tax advantages, but in reality, it's just going to pass through to the partners. So whatever your equity ownership is in that multi-member LLC is going to be directly proportionate to what you would pay taxes on anyway. So there's really no tax advantages. If you get into the S Corp and then you start paying yourself a payroll and all that, that becomes complex and there could be some tax advantages, but I wouldn't recommend that until you get to that point. And you would just want to talk to your CPA and see if it makes sense because it's not going to make sense for everyone. In terms of asset protection, going back to buying in your own name, the simplest, easiest thing you can do is get an umbrella policy. So make sure that you have, you're well insured on your rental properties. We got an insurance guy in the back. You want to raise your hand? A little plug out to him. If Marty, if anyone needs some insurance policies, but it's very cheap. How much does a $1 million umbrella policy typically cost? $400 a year or something?
$250, $300 for a couple with a couple cars.
Yeah.
It might be $200 more for the first investment property.
So you get a whole nother layer of insurance protection just by getting an umbrella policy. They'd have to exhaust the insurance on your rental first, but it kicks in afterwards to help protect your personal assets in the event that there is something that goes beyond your other coverage. And then as you get into owning more and more properties, and maybe you want to segment and have 3 or 4 rentals in one LLC, or maybe some people go crazy and have a new LLC for every single property. We just had an attorney speak on this, and her kind of take was like, if you have, say, properties in one area, or you have businesses that do one function, like if you have a wholesaling business, you might want to keep that separate from your rental business. But again, this is all going back to like things that you should really consult with on an attorney, because it's not like one size fits all. It's more like you need to really, the attorney needs to understand your situation, what your goals are. I would recommend start off buying in your own name, get to like at least 3 to 5 properties in your own name, then go form an LLC, because as soon as you form an LLC, there's extra costs, there's extra tax prep, it's just, for the liability protection, I would get the umbrella policy, and then I would just make sure that you just manage the property well and stay well insured, stay up on your rental licenses, all that kind of stuff. All right, so I answered most of those questions. I hope that wasn't too much too fast, because probably took up more time than I should have. I know you guys are here for a reason, and I want to make sure I answer your questions. Going back to when's the best time to buy. So, Frank, can I use you as an example?
What's that?
Can I use you as an example?
Oh, sure.
So, with your houses in South Philly, what was the cheapest one you bought?
And well, the cheapest one I bought was $5,000. That was in North Philly, lousy area of North Philly.
Okay. And
cheapest one in South Philly was 14.
14. Okay.
Many years ago, though.
And how many of those did you buy?
I bought 13.
Okay. And when was the right time to buy those houses?
In the beginning, I thought I had to wait. Any time to buy is the right time. Numbers have to work.
Yeah.
Whether it's up market or down market, if the numbers work, it's the time to buy.
Okay. And then what was the highest price that you sold those houses for?
I sold one for $210.
Okay.
I think that was one I bought for $36. I can't remember exactly.
So not quite 10 times as expensive, but not quite 10 times return, but maybe
No.
at least 5 times return, maybe 8 times return.
Yeah, and then you have the income during the rental period, and the tax.
So probably with all that combined, it probably was well over 10 times what you put into
so
it.
it all comes together very well.
So what this is these are real estate life cycles. So everything comes in cycles, and wealth is created. You guys are here for the wealth project. Wealth is created over time. So this is the least exciting thing I'm going to say is real estate is get rich slow. If there's plenty of get rich quick ideas in real estate, but real estate investing, in my opinion, is buy and hold and get rich slow over a period of time. And during your lifetime, you're only going to get so many market cycles. So even if you try to time it and you try to buy here, if you end up selling here, you would have been better off still buying here and buying 3 on your way down versus waiting for that one here, because you're never going to time it right, because when it's up here, it's not going to matter. Does that make sense? Meaning, it's just like if you try to time the stock market, everyone says it's foolish. It's better to dollar cost average in, and the best thing to do is try to dollar cost average in sooner than later. That's how real estate is too. Everyone's so afraid to make a mistake and buy here, and then they're going to sell here. But if you don't sell here, it doesn't matter. Because if the rent keeps going and keeps covering all your expenses, you're still snowballing cash. And then when it's up here, you could sell it, you could refinance it. You know, it's just, you create so much wealth on those market cycles. And you're only going to experience so many. So they typically are 8 to 12 year cycles, but there's no specific rule. And even a national cycle isn't necessarily what's happening locally. Because you could have a national cycle that's going down, but you could have a neighborhood that's going up. So real quick, can I ask for your help, Westchester University guy here? So this is a really small tape measure. I'm going to have you go over that way. I haven't done this in a long time. Let's go. I'll be generous. I'm going to, what's the average life of a male in the United States? Do you know? 77. And then female, I think it's like 80. Not 89, I don't think. 87?
79.
Oh, 79? All right. Well, I'm going to just be super generous and say we'll all live to be 100. That's 100. So you can kind of get like, 50 marks around here, 80s around here. You have to think how many life cycles are going to happen during your real estate investing career. And the reason I show you this is because it's so urgent that you take action now versus trying to figure it out, because these life cycles are these real estate cycles are taking place all the time, and the sooner you get in, the better. So there's so many of us that just like wait for the perfect strategy and we never take action. And I've seen, I led that real estate meeting that Rob's talking about that he leads now. I led that for 10 years, and I had agents come for 10 years and they're still trying to figure out their strategy. For 10 years. And they missed the whole cycle. And they could have bought the worst deal in the world then, and they would have crushed it. You know what I mean? Just because the time. I mean, and that's why I wanted to thank you for sharing that example, because it's extreme, but it's very realistic over a long period of time. Real estate, you're gonna do very well between the equity pay down and everything. So I'm gonna blow through these slides as fast as I can. What is your most valuable asset?
Time.
What is it?
Time.
Time?
Knowledge.
Knowledge?
Time.
Time?
Network.
Network?
Opportunities.
Opportunities?
Resources.
Ed, I thought you would get this one.
Health.
Yeah. They're all great answers. There's no really right or wrong answer here, because I think value is what we place on it. For this example, I'm going to say it's energy. Because, and here's why. Like, think about if you have all the time in the world, but you do nothing with it. Or you don't have much time, and you know you need to do something, but you have no energy to get it done. And think about when people really make things happen, it's because they put a massive amount of energy into something. Some people can make like drastic things happen in a really, really short period of time because they bring a ton of energy to it, whether it be their energy or other people's energy. And that's what leadership is. Leadership is engaging other people's energy into something that is your vision and mission. The precursor to energy and what influences it is your focus. So whatever you focus on, that's where your energy flows. That's why this is so important, to get very clear on what you focus on. And for 10 years of your life, you don't focus on trying to find the perfect strategy and just look at time-tested, true, things that have worked for many, many people. And that's why I'm telling you, buy and hold is the way to go, versus looking for wholesaling, looking for flipping, and all these, shiny pennies. More people have created wealth in real estate with what Frank did than anything else. I would bet than everything else combined, the wealth was created through market cycles and buying and holding. You're born into this game of life. And just think that like every time you go around this board, it's 1 month, okay? And when you go past go, you get your paycheck, and then as you go around the board, there's these monthly expenses. And then there's all these distractions. And the Monopoly actually can teach us something very valuable. To buy real estate, buy it in a concentrated area, buy it in a good location where the rents are higher, buy 3 in a row, tear it down and build a hotel, right? Like the whole concept is like highest and best use. All the things that I just talked about, we had all the knowledge, right? When we played this game as a kid, we just didn't really apply it to our lives. And, you know, one of the reasons I was saying I don't want to go into all these different strategies is because if we try to get good at everything, we'll get good at nothing. So fix and flip, that's a business. Wholesaling, that's a business. House hacking, I like because it leads into buy and hold. Live in and then rent, I like that because it's a hold. Live in and flip. I don't necessarily like that, but there are times, and I did it. I did it this year, and I walked away with $380,000. So there's always exceptions to the rule, but if you really want to create wealth, it's buy and hold. And the house that I sold, realistically, is worth more now already that I walked away with all that money. And in 5 years from now, that I sold it for $775. It's a 5,000 square foot plus house. You'll never be able to build that house for less than $1 million. So it's going to continue to go up. Burr, buy, rent, rehab, refinance, repeat. That's, if you guys don't know what that strategy is it David Green? This guy actually looks like him. Have you ever seen David Green?
Yeah.
You kind of look like him.
His name's David too.
So look him up on YouTube. He's right there. We brought him in. That's like the best strategy. It really is. And then how you get there, there's different tactics that you can use and spins on it. But Burr is like the best strategy. It's you buy it. Hopefully, I mean, if you're not into rehabbing, you don't have to rehab. You could just buy, rent, refinance, repeat. It's just, usually you can't get all your cash out if you don't have the rehab component because you're buying properties that don't need to work. That's the value add. Long-term buy and hold, debt snowball. That's really just if you buy cash and then you go into, you take your rent and you save it up and buy more. That's fine, and it's super conservative. It's going to be really hard in this market unless you have boatloads of cash to start with. That would be like what Frank did, a long time ago. You're buying a house for $5,000. Did you do that? Did you? Yeah. So you used that strategy, and it was awesome. We're not in a market where you can buy houses for $5,000 in this area. So you'd have to go into a lower end market where you can maybe buy houses for 30, 40 grand. Ed, take your 40 grand, dump it in, pay cash, wait till you get that money back. But you might not buy a rental for another 3 or 4 years, and look how much time you wasted on a life cycle of real estate. Trade up plan, that's really like a 1031. So you buy real estate, you always keep trading up through 1031 tax deferred exchange. It's a great strategy. Hard money lending, that's what Frank does now, and that's what most of us should aspire to do in the future at some level. It doesn't need to be your full-time thing, but that is more passive. As Rob was saying at the beginning, rentals are not very passive. Discounted notes, syndications, and REITs. So notes are being on the paper side of the business. We're all paying interest payments to mortgage companies. There's a way to get on that side of the business, and it's very passive, and it's a great strategy, and it is investing. I'm just not going to go into it today, and it's a little bit, in my opinion, I just don't think it's the first rung on the ladder for most agents or most new investors getting started. And syndications are pooling multiple people's money together. So as soon as you put more than one person's money together in a real estate investment, you could be considered selling a security, and it could be considered a syndication. Typically, if it's someone that you know and you have a prior business relationship, there's exceptions to the rule where you don't have to do any SEC filings. But anytime you start syndicating and using like multiple people's money to put together to buy an investment, you're now potentially selling a security. So it's just getting more complex. Let's keep it simple and just buy rentals. And REITs is real estate investment trust. So that's where you're basically just investing in a business that happens to own real estate. And depending on how well they do with their real estate portfolio, you get a dividend return. And then I just want to distinguish between investing strategies and tactics. So what I mean by that is like buy and hold, that could be an example of a strategy. And then to get into a buy and hold, you might use some different tactics, which would be like, and these tactics, the first three are just relating to the financing of it. So you might use a subject to financing, which is taking over an existing mortgage payment. They don't want their house anymore. They don't like that payment. You're willing to take over the mortgage payment. And with that, you actually leave their mortgage on the property in their name, and you pay their bank, and you own the property. And then you rent it, and that's the cash flow that loops through. Seller financing is when you find a seller that has a ton of equity in the property. Let's say they paid it off completely, and they want to be on the note side of the business, wherever it was, discounted notes. They probably don't want to discount their note on that, but if they're seller financing it, they become the bank, and now you don't need to qualify for all these, loan qualifications that you might have to. So it gives you more flexibility, and you can negotiate the interest rate, you can negotiate the term of the mortgage. So maybe you want a lower payment, and you spread the loan out over a longer period of time. Maybe you only need seller financing for short term, 6 months to get in, rehab it, and then you can go to a bank and refinance it and cash out the seller. So there's all these different tactics once you know what strategy you want to go after. And then OPM, I'm just going to say other people's money, but that's using a private lender. There's a lot of different options, but usually it's private lender, hard money lender. You go out, you pay real high interest on the property, rent it out, refinance it, pay the lender back, do it again. So that goes back to the BRRRR strategy. So there's a lot of overlap in these. Again, but fix and flip, like one tactic in that you might need to learn is finding off-market deals. If you get really good at this and you've been flipping, then use that tactic and just dump it back into one strategy. So what you want to do is pick one strategy, learn multiple tactics that all feed into it, and then you have to learn how to do hybrids and stacking tactics. So a hybrid is where, let's say I'm going to take these two tactics, I'm going to combine them into a hybrid, and then I'm going to stack it into something else. So let's say I have a rental, I find a seller that has a property that's mostly paid off, but they have a mortgage on it. They're willing to hold paper, meaning they're willing to be the bank. I could take over their existing mortgage payment, buy it subject to their mortgage. I could structure a seller finance note in second position for the differential. So let's say they owe $25,000 on a note, and then they are willing to take back $70,000, and they want you to put $5,000 down. So you put $5,000 down. There's $70,000 on a seller finance second mortgage. There's $25,000 on a debt payment that's already existing subject to. You take over that. You just got into that deal for $5,000. And then let's say you buy it in your self-directed IRA, and you stack on another strategy so that later on, when that property is fully paid off, all that cash flow just goes in tax-free, meaning you're not going to pay taxes on it. When you're 59 and a half, you can start taking distributions and pay no taxes on it. So you can take a deal that's not that great, and you stack a few strategies, and you can make it a really good deal. I know that's a lot, and it's a lot of lingo, but I just want to get your mind thinking that, like, as soon as you're like, I don't have enough money to do this, I don't know where to start, pick a strategy. And I'm just going to tell you, if it were me, for 16 years of experience, I would never tell anyone to do anything other than buy and hold, ever, 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 ever. And I would say learn subject to, seller finance, other people's money, BRRRR strategy, know those things in and out, and then go find off-market deals and learn how to deploy those strategies. Because you're going to come across opportunities. We have one of our agents here that he brought a deal, he was looking at it and he was like, I know it's kind of close. And I was like, this looks like a perfect subject to deal. And he turned it into a subject to deal. And the difference was him paying that mortgage off in 17 years sooner. So 17 years of having the property debt-free just by changing the strategy or changing the tactic on the same strategy. Because he was going to do a buy and hold, go to a bank, put down the 25%, put in a commercial loan, have a 5-year reset. He took over this amazing debt that was already on the property with a lower payment that was already so far into the mortgage that it was chunking away the principal much faster. Too much? All right, I'm just really at this point reinforcing why for buy and hold, because when you look at all the advantages of a buy and hold investment in real estate compared to any other way you can make money on this planet, there's nothing that compares. So when you're an employee, you are working for someone else, basically to fulfill their goals and dreams and their company's vision and mission, and you're getting paid for your time. There's really no way around it. You're not getting paid unless your time's involved. As a business owner, you now have, well, actually, I'll jump to self-employed. So self-employed, now it's not always just your time. Your time's usually always involved, but it's also the amount of work. So now you're a 1099 employee. You have some tax advantages. Oh, by the way, there's like really no tax advantages here. None. This, you have some tax advantages because this, you go to work, they pay you for your time, they pay you after they take the taxes out, and then you can expense your lifestyle. With self-employed, you now have some tax advantages where you can start expensing certain things that are related to your business. Your cell phone, your mileage, so you're getting some tax advantages, and then you can also now produce results and get paid for your results sometimes versus just time. You could be 1099 and just still have an hourly wage, but usually what I'm referring to is like I'm talking to agents and they're looking at selling houses, so they're still 1099. A business owner, you now have people, processes, and systems that you own that make you money. There's some tax advantages depending on what the business is and if there's tax credits or the industry you're in. There could be some tax advantages, but nothing like real estate, because even if you have tax advantages, if you get active income from a business, there's no way to legally offset that in terms of passive income and active income. You can't combine the two and take depreciation losses against active income, even with the business. Only when you become an investor can you structure your active income to be offset by your passive income and the depreciation. Meaning, if you make $1 million a year and you become a real estate professional and you can structure your real estate investments such that you have $1 million a year in depreciation and losses, you will even that out and pay nothing in taxes. So when everyone got mad at Trump because he didn't want to share his tax returns and he said, basically he's not paying any taxes, I believe, and every real estate investor I know guys that are, I know a guy that has $1 billion in a real estate fund and he has not paid any personal income tax since 1980s. It's because of this. It's the real estate professional election. It's 469 in the tax code. It's the best thing to not pay taxes. And with that, just to give you an idea of why that's so important, when you look at your monthly budget and you look at that pie and where all the money goes, most people think, like if you look at Susie Orman and she's like, oh, here's your budget, your biggest slice in that pie is your housing expense. Not for most people, not if you're in a good area making good money. Most people, it's their taxes, but it's not even on that piece of pie because they're using after-tax dollars that you can play with. So imagine if you had that back. And then the housing expense, right? So if you can eliminate your largest expense in life over a long period of time, it's huge. What Rob's doing is so powerful. So don't discount tracking. How many of you know if you graduated from last year in terms of the financial world? From last year till now, so we have one hand go up. 1, 2, 3, 4. Sheila?
What's that?
Do you know if you graduated from last year in terms of your financial success?
Oh, yeah, for sure.
Yeah. But how do we know if we don't look at it? So if you're not tracking this, and this is your report card, so most of us, we're not even in kindergarten yet because we're not even tracking our results. We're still in pre-K. And you don't want to keep repeating kindergarten. So if you don't know how many assets you have and what your liabilities are and what your net worth is, it's not your human net worth, but your financial net worth. That's your financial report card as an adult. And if you don't take it seriously, no one else is going to. There's no one else in this room that is responsible for your finances or your retirement. And the government's not responsible for it. Your parents aren't, your kids aren't, your friends, your family, your work. And as soon as you put that in someone else, you're literally setting yourself up for failure. So if you're not really diligent about tracking this, and it's boring at first, but when you start adding assets, you become addicted to seeing the growth. So your personal financial statement and knowing your financial freedom numbers is so important. I genuinely believe buy and hold and notes is the perfect storm because now you have passive income with notes and you have the depreciation with the bricks and sticks. And I'm not going to get into details on that, but if if you're just getting started, just focus on the buy and hold strategy, which is buy properties and hold on. And the reason is, and I'm not saying this is all from real estate, but Warren Buffett did a lot with real estate. It's really because of the power of compounding. As that mortgage payment pays down, as rents go up, as you experience real estate cycles, those things together compounding over time, that's what, when you saw Rob's chart, same thing. Mine looks the same. It's just, and it doesn't look like crazy growth, but when you start hitting these bigger numbers, this thing starts really snowballing. Let me just go back. Yeah, so appreciation, depreciation, leverage, cash flow, influence, and what I mean by influence is you can't really influence the stock market, not unless you're Elon Musk and you can tweet something and have something shoot up. But we can influence our real estate investments. We could say, oh, you know what? This is a single family rental that might rent for $2,500 to $3,000 a month, and Rob's going to furnish it and make it more of like a high-end luxury furnished rental, and he's going to get $5,000 a month. That's influence. That's creativity. Just change the entire cash flow of that asset. You can't do that with anything else. I don't want to say anything else, but not portfolio passive investments. That's the whole point, is you have no influence over it. And you can buy at a discount. You can go out today and negotiate a lower price. Rob, what was that? Your one client you just had, got him under contract, appraised for like $100,000 higher.
Yeah, we're 560 appraised with 645, so 85,000 higher.
So
the person bought a new construction 3 months ago, paid 660 for it, and we're paying 560 for it 3 months later.
So they just made $100,000 just by pulling the trigger. This is what I was talking about, the real estate professional election. It's more of something you put in your notes now and make sure you talk to your CPA. So if you're just getting started in real estate, it's probably not going to apply to you, but you might not need it either. But as you get further and further along in this, especially if you have a high earning potential, then you can really be strategic about tax planning and making sure that you're specifically setting goals to buy a certain amount of assets to offset your income. Some other things to consider. I don't know if anyone has any other like businesses or sales or selling stocks. I mean, probably no one's selling stocks right now, but look at different tax strategies with opportunity zones. Make sure you're maxing out your qualified plans, and if you are, then make sure that you understand how you can actually invest them in real estate or start getting on the note side of the business by lending money to other real estate investors. We could become financial friends. Like Frank could lend to me from his IRA. I could then go lend to Rob with my IRA, and Rob could lend to Frank with his, his IRA. And we all just financed each other's deals and got tax-free interest income, and we paid each other versus paying the bank. This is just why I was talking about taxes, to give you a visual example of the power of compounding and the difference of taxes. So this is with a $50,000 investment with no other contributions at a 10% compounding return. And the three variables are tax-free, tax-deferred, and taxable. So tax-free real estate's not really tax-free. Real estate's tax-deferred. But if you own investments in a Roth, then when you cash out, it is tax-free. So it could be a Roth 401k or Roth IRA. There may be some other vehicles out there, but that's really what I know about. And then real estate's tax-deferred, and then taxable. And taxable means every year you're paying taxes, so the compounding effect doesn't really have the same exponential growth. And the difference of that $50,000 taxable is $748,000 versus 1.5 million at tax deferred, or 2.2 million tax free. So completely different lifestyle, just with structure and setup initially. And it's your responsibility to understand what's going to really work for you. And you might have a blend, but I would definitely go for tax-deferred investments and tax-free versus taxable. And it's pretty clear why. I'm going to wrap it up. Just a few other things that I just want to leave you with is, I had two other ones on here that got deleted somehow. That's really bad font, but whatever. Game-changing mindsets. So like, you have a current fixed mindset, and the reason that your income and your assets and your liabilities all look the way it looks now is because of your current fixed mindset. And what I've run into most of the time is people feel like they don't have enough. I can't afford it. And that's the whole reason you do this, is so that you can afford it. But you have to shift your mindset before the results come, because you have to take the action to get the results. And what this looks like is when you see a really great deal and you just know, you're like, I can't afford it. That's your scarcity mindset kicking in, telling you to stay where you're at, stay the same, stay safe, and you're just going to have the same future. Versus shifting it to, how can I afford this?
Do it, baby.
Thanks for the applause. Thanks for hanging in there too. Thanks for coming out. Thanks for hanging in there. I know it's a long day. Like Ed said, we probably could have charged a lot of money for this, but we want to give free information out there. Because what I've realized in this journey of real estate is there have been so many people that like withhold the information that has made them money. You know, they're just stingy with it. They're not coming from a place of collaboration, coming from a place of contribution, right? So we have really taken it upon ourselves as brokerage, as individuals, to give back, right? Give back as much as we can and share. You know, as you can see on our wall over there, collaboration is one of our core values, right? Open exchange of experience and knowledge. So what we want to do is give back to everyone and give them the information that has helped us to get to where we get. So there has been a lot of great stuff. Rob has shared what the mission is about for the Philadelphia Wealth Project. Steve shared all these great tactics and strategies to get started investing. Ed talked about mindset, and that was phenomenal. You got me thinking a lot, man. So I'm really thankful for that. But now we're gonna get on the roller coaster, right? And we're gonna take these grand ideas that we have and we're gonna put it into actionable steps. So this is going to be, you're actually gonna be writing, right? So I have QR codes that you can scan up here. You can do everything on your phone. But it's going to be immersive, right? So it's going to be taking it from, what's today, the 10th of December? December 10th, and we're gonna focus on December 21st, 2023. We're gonna look at your short-term investing goals. You know, we're gonna shift our focus from and all the pie in the sky stuff is fantastic, right? We really need to get our mindset right. We really need to think about the wellness pie over here. We need to think about the tactics and the strategy, but we're really gonna break it down to what's your income gonna look like from your investments. We're gonna set 3 rocks, and I'm gonna go over what rocks are for the first quarter in 2023, and then we're gonna look at weekly, daily activities, right? Because this is what's going to help you hit your rocks. Your rocks are gonna help you hit your investment goals, and then your investment goals are gonna help you retire early, retire at 45, right? So just some stuff about me real quick. My name is Shawn Connors. I'm the managing broker, co-owner of Vanguard Realty Alliance. I am also an investor, but first and foremost, I'm a father to my 2 beautiful girls and a husband to my amazing wife, Kelly. We've been together for almost 10 years now. We have a 5 and a 2-year-old. This is why I do what I do. Everything I do is for them, right? Like, that's my biggest why. They are the ones that get me up in the morning and make me stay focused, right? And it's hard to stay focused, especially in real estate. There's always so many different things too that you want to do. But I've been in the business now for 6.5 years. It's been a roller coaster for sure. I started out wholesaling properties, so I have experience with wholesaling. I started out also, I met Steve in 2016, started working with him. They were, at the time, he did have the brokerage. I wasn't licensed yet, and they were a flipping company. So Homes for Cash, and what I was doing was the acquisition. So we were generating leads. I was going out, meeting with sellers, getting the property on the contract, either wholesaling the contract, or we were purchasing it and then the company was renovating it and we flipped it and I sold it on the back end. So wholesaling is pretty much how I got started in real estate. Then I got licensed. I know we talked about it earlier. I forget who was mentioning wholesaling and being licensed, but I had a huge ethical issue with it because I knew at that point that I could sell the property for more on the market than I could if I paid for it. Just one quick caveat, because I didn't mention it when we were talking about it. So in my opinion, if you are a licensed agent and you're wholesaling, the only ethical way to do it is to purchase the property yourself and then you resell it. So there's many situations that sellers are in. Some people need a quick sale right now. So if they need a quick sale, you can meet that need and you can buy the property. And then once you buy, you can do whatever the hell you want with it. You can relist it right on the market, sell it for $20,000, $30,000 more. But if you meet their need and you disclose everything, that's the only way to do it, in my opinion, if you're licensed. If you're not licensed, don't worry about it. So I started investing in real estate in 2018. We lived in this small little ranch, but we loved it. It was my wife purchased it back in 2011. I moved in 2013. We were house hacking this before I even knew what house hacking was. We always had, it's a 3-bed, 2-bath. We always had other people living with us, always, for the majority of us owning this property together. And they helped pay the mortgage, right? So we were saving money. And I know we talked about house hacking a lot. I absolutely love it. My wife bought it with an FHA loan, 3.5% down. She bought it for $130,000, and then after years of owning it, it's now worth $350,000. And we're in Downingtown Borough, so we got flooded in 2021, and then we ended up putting like close to $100,000 into fixing it. But now it's worth $350,000, and this little tiny property in Downingtown, but this propelled us, right? So in 2018, we said, we had our daughter, she was like 1.5 almost. We had 2 dogs in here. It's a 1,100 square foot house, and we're like, we need more space, right? And I thought to myself, you know, I had a really great sales career, but I was nervous, you know. I was like, how the hell are we gonna buy a house, right? We don't have enough money, you know, and if you're around Steve Seymour enough, if you tell him you don't have enough money, how are we gonna do it? He's gonna be able to talk you into doing it, just like he did for Rob. So we bought our property that we live in now, and we turned this into a rental, right? We didn't do anything, we didn't sell it, we didn't consider selling it. We worked our asses off to save up money for a down payment, and we bought the property that we're in now. I don't know about anybody else, but I consider this, although it's our primary home, I do consider it an investment, because I know when we decide to buy another property, we're keeping this, right? We'll keep this as a rental. So we spring to this property, then we had our first rental, we got our taste of what it was like, and then a couple of years later, we said, we were traveling in North Carolina, and we're like, it would be really nice to own a property, you know, like a short-term rental. I had no idea what to do, but we got bit by the bug of short-term rentals. That was 2021, in March 2021, and then we decided that maybe we should focus on somewhere closer to us, and then we bought our first short-term rental in the Poconos. And then about a year after that, we bought our second short-term rental in the Poconos, and now we have 2 properties in the Poconos, 2 in Downingtown, and then this year, we decided to buy this building that we're in now. So all of that, now we have these 5 properties, bought 4 of them in the last 4 years, and increased our net worth over $600,000. And they cash flow, which is really nice. It's really, really nice to have that cash flow. So why listen to what I have to say? I've been to so many different seminars, and the people up there, you know, a lot of you don't know who I am, but between, you know, my sales business, the short-term rentals, long-term rentals, the growth of our brokerage, so I helped build it from 16 or 17 agents to 80 agents to where it is now. By this building, I've helped create probably a little bit more than $2 million in value. So I have experience. I'm not the most experienced person in the world, but I do have experience in real estate, and I can share that with you today, and I'm excited to do so. All right. I love planning. I love setting plans. I love executing them and breaking them down from a practical level, right? So we're going to focus on 1 year, 2023. But in order to get to where you want to go in 2023, you have to take an honest look at what you did in 2022, right? And then we're going to focus on creating the goals for 2023. So we're going to get out our phones, right? And we're going to scan this QR code. This is going to take you to a Google form. The Google form is 5 sections, okay? The first 3 sections are what we're going to focus on right now. So we're going to focus on how productive you have been in 2022, because the more productive you are, the more money you're going to make. And we're going to set our business goals for 2023. But we're first going to look at what we did in 2022. So I'll give you some time to scan this and get on it, and let me know if you're having any issues or if you need the Wi-Fi password. If you don't have the Wi-Fi password, it's Suite 409 with a capital S. Yeah, make sure, let me know if it's working. It's good? All right. Is anyone having any issues?
Shawn?
Yes.
That's a different one than this?
Yeah, it's a different QR code than that, yeah. But you can, if you bring up your camera app.
Okay, man, I just had it.
So just hover over up there, and a link should appear for you.
Mine doesn't usually work.
Okay. All right, well, let's go over to more. And no.
No,
that's
I don't
not
think
it.
this phone can do that.
I don't know.
Is there a website that I could?
It's a link. I could send you the link.
Yeah.
Let me,
Shawn, you
Yes.
have my email.
yeah, I
So
do.
send it to
Okay.
me.
So has everyone been able to access it?
Yeah.
No? What's wrong?
Mine doesn't do it.
Oh, come on.
I swear, I don't know how to do it. It doesn't work.
It's an iPhone, right?
It is, but it doesn't work. It's even active.
The QR toggle's even turned on.
Oh, I don't even know what that.
No.
Don't send it to me, then I'll forward it to you.
Come on, Tracy.
You can just send me the link and I'll fill it out.
Yeah.
Do that and send
It'd be better if you fill it out with my husband and
All right.
So that would be great. Thank
All right. So we're just gonna take 5 to 10 minutes now to focus on filling out section 1 through 3. We're only gonna do 1 through 3. Don't go too far yet.
I can do that, 10-minute time for music, 10 minutes.
Tracy, I'm gonna send it to you. We probably don't need the full 10 minutes, but we'll just go as quick as we can. Come on. Oy. Keeping you awake? You got it? You good?
Income is specific.
You guys were able to pull it up?
investments.
All right. So only section 1 through 3.
And when you refer to income, you're speaking about income from investments.
Yeah, flips, wholesaling,
Cash flow.
cash flow. I don't know why this thing never works. It's so frustrating. Is yours working? Yeah, so the whole point of this is figuring out how this year has been for you so you can focus on what to continue to do that has worked, and then you can cut out what hasn't worked for you in the past. Does anybody need help? Any questions? Good? Did it work yet?
Yeah, he's gonna send it to me.
No, I'm just, I took a picture of it, I'm sending it.
What is, write your email
I don't
down.
have the app for the, that, what do you call that?
QR code. Write your email right here, and I'll send it to you right now. Sure. I can shoot you a quick email. Got it.
Save it, share it, edit it, or lens it.
All right, I just emailed it to you. Can you you can get access to your email on your phone, right?
Yeah.
Okay, cool. It shouldn't.
That's my second go-to.
It shouldn't go to spam, but I would just. Should be in the inbox, right?
Yeah, it should be in the, maybe it just takes a couple minutes.
Yeah, it could take a minute or so, but I would just keep refreshing as much as you can. And just make sure I send it to the right.
Shawn, when you send that email, could you send an email with which app you use to do that? You need an app to?
No, the QR code, I can just scan it with my phone in the camera. Like, I don't actually need an app. So,
M. Lavin, Lavin,
yeah.
@hotmail.com.
Yeah,
I sent it to mmlavin@hotmail.com at 408. No, just
taking a couple minutes.
yeah, keep refreshing.
Yeah.
Shawn, I took a picture of the one you had up on there.
Okay.
But the only choice I have is to share it, lens. What's that mean? Looking for
That's it.
Ah.
Yeah.
Okay. When this pops up, I'll send it to you by email. Or by text.
There you go. That's it.
Okay.
I'm thinking, unless he's in that house across the street next to the post office that's hidden, it's got a long driveway that's hidden in the back.
You think anyone needs more time? Yeah.
That's good, yeah. Want to take more time?
You don't need more time, do you?
We're not using it now, right?
No.
Yeah, but he comes up here a lot. I see him a lot. Don's one of my clients.
Nice.
That lady.
Just sent me the title documents. She was
I have the thing in here.
Is everybody good? All right. So if you haven't done it, you can just go through it as we go along too. It's 5 sections, so it goes 1 through 5, and then you can just go back, but still follow along. It'll be easy. Yeah, but I love doing this at the end or towards the end of every year. I love going back and just looking at where my business was, what has worked, what lead sources have worked for me. So I'll do it in my sales business, for the brokerage, for investing, and it makes sense to really look at, and we want to start focusing on what's going to generate business, right? Because in real estate, there's so much shit that gets thrown at us. All these different kind of lead sources, all these different companies that say they can do this. But if you really focus on what you're good at doing and you double down, triple down, quadruple down on it, you're going to make more money, right? So you have an idea now of what was working in 2022. So you know what your numbers are. You have looked at your goals, the goals that you set, and then you compared it like, did I reach my goals, right? And it's not meant to demean in any way. It's just meant to track, right? Because everything we do is all about tracking. So then you looked at your 2023 goals, right? And I know it's really hard to set them in like 10 minutes. It takes time. It takes hours for me and all kinds of different sessions to really set them. But this is more just high level, and this form is editable. So you can always go back and edit what you put in, because again, it's going to take more time. The easiest way that I have learned in business to get close to your goals is to break it down, right? Because we have 12 months to hit your goals, right? And one thing that we focused on, so as a business, as a brokerage, we have been using EOS, Entrepreneurial Operating Systems, for over 2 years. Their big thing is you set a 10-year vision, 3-year goals, 1-year goals, and then you break it down. You break your 1-year goals down into chunks, or what we call rocks, so 90-day rocks. And that's what we're going to focus on next. We're going to focus on the man, the myth, and legend, The Rock, right? And just to give you an idea of what rocks are, I'm just going to play this, and I hope it works. If it doesn't, I'll make sure I play it on the computer. It's only like a 2-minute video, but it's going to give you a really high level of what rocks are and how to set them. Whoops.
We teach entrepreneurs to get everything they want from their business by implementing a complete set of real, simple, practical tools so that they can achieve everything in their vision. As the saying goes, vision without traction is merely hallucination. And in strengthening the 6 key components and strengthening the traction component, we teach clients 2 simple tools or disciplines. The first tool is called rocks. And this is a term that's been around for thousands of years, back to cavemen and women. And it simply means that we're going to focus. You only have so much time and energy throughout an organization, so rocks are your priorities. They enable you to focus as an organization. Less is more, only 3 to 7. If everything is important, then nothing is important. So every client that we work with, we get them down to 3 to 7 company rocks and 3 to 7 individual rocks at the leadership team level. This creates a 90-day world for you. So you're checking in on your vision, making sure you're on the same page, and then you're going down to work for 90 days on just 3 to 7 things. And you're incrementally moving the business forward, gaining lots and lots of traction. You can download a rock sheet and other free tools at eosworldwide.com.
All right.
At EOS.
Now you're going to play. So that's an overview of what rocks are. So they're 90-day targets. We're going to break down your 1-year goals into 90-day targets, right? 3 to 7. We usually focus on 3 to 5 because we realize that if we go over 5, most of it doesn't get done, right? So, and this is strictly based on you personally. So maybe you like to do 6 or 7 different things in a quarter, but if you really focus on what are the 3 things that if I implement in the next 90 days that will help me to get to my 1-year goal, and no matter what, you're going to focus on completing them. So this is just an idea of what we do for our brokerage. It'll obviously be different for real estate investing, but we decided to create the Ally program. So essentially what that is giving agents the ability to recruit other agents and to create passive income. The lead referral program, which is the one that I'm responsible for, so that was getting it. Selecting the lead source, setting up the lead source, having leads come in, and then referring them out, right? So, and this is something that I've been working on for the past 90 days and have completed at this point, and with two weeks sparing, which is really great. But you know, we have really tried to narrow it down to like what are the 3 to 7 things that are going to move the needle forward in your business. So now with this next section, we're going to complete only number 4. We're only going to look at section number 4, and that's the same link that you pulled up before. So section number 4, we're going to look at what your quarterly rocks are, but we're going to focus on January 1st, 2023 till March 30th, 2023. So that's going to be your first set of rocks. And think of 3 to 5 things that you can implement in your business that's going to help you get to your 1-year goals. So if your goal, let's just say, is you want to buy 5 properties. You want to buy 5 buy and hold properties between now and the end of next year. So how are you going to do it, right? One of your rocks could be your marketing, right? What is your marketing source? How are you going to get opportunities to you? Are you going to do direct mail? Are you going to do PPC via Google, Facebook? Are you going to door knock? Are you going to hire bird dogs, people to go out and door knock for you? Are you going to cold call? I don't know what it is. It's very specific to you and your business. But think about, if you want to hit that goal of 5 buy and holds, how are you going to get there? What do you need to implement now for the next 90 days that's going to help you get to that goal? And we're only going to break it down. I think the best thing, honestly, would be to keep it on the lower level, so 3. So if you can think of, for the next 10 minutes, think of 3 things, big rocks that you are going to take on for the first quarter of next year in order to help you hit whatever goal that you set. And if you have questions or need like a little more guidance around that, just let me know. What do you think? Yeah?
Yeah, good.
What's that?
I have one in the car. I can get this room. I have a car. You mean for here or? Oh. So this is for window sale. Yeah. I can give you a card. I have a card in my car. Okay.
What are your rocks, boss? What?
For investing, I haven't got there yet.
No?
My rocks for my business.
Well, think about it, man. Even if it's one thing, what is your goal for next year? What is one goal you have?
Finish my house.
Huh?
Finish my house.
I mean, that's not investing.
Yeah, it is.
What are you
Then
going to do
I
with
can
it?
pull out a HELOC, and then I have the funds to buy another property.
All right, boss. I respect that. Yeah. I do. So less is more. I always like to say less is more. Don't overwhelm yourself. Don't take on anything that you don't feel like you can actually achieve in the first quarter. Maybe it's 1. Maybe it's 2, you know? Nobody wants to fucking do this. Nobody wants to do this.
Hey, you should do it like with the rocks.
Yeah.
get the input from the people, like, hey, what's yours? Because I think some people just didn't even know, like, an idea for a rock, if that makes any sense.
Yeah. Well, I just gave one, didn't I?
Yeah, but it's specific to your business, not investing.
Yeah, but I also said an investing one. So if it's marketing, you know.
Okay, yeah, marketing. Now
Yeah.
let's come up with 5. Like I would say, like a big rock would be figure out how to get the money. You know, so figure out how to get the money. So maybe one of your rocks is talk to 10 different lenders.
Yeah.
Like shit like that.
Part-time, like 4 times a month, maybe 3 times a month. If it's a busy month, like November, I was there like.
What do you think? What are your rocks? What is one you think you can do to help you hit your goal?
Well, I need to get more money out of my IRA.
Okay. How do you do that?
Call Vanguard. Go online. Get money. Very
Is
easy.
it just one call that you need to make? Is that?
One email.
Yeah.
I don't just go on my account.
Yeah. But what is one of your goals for next year?
Well, I really, even though I'm investing in these syndications, and I'm happy with that, I really want to own something else myself.
Okay. So
By
you want to
myself.
own one property by yourself?
Yes. Or
Okay.
with a partner.
With
I
or
wanna
with a
own
partner.
a commercial or a multifamily.
Okay. And how are you going to get there?
Well, I need to get more money out of my IRA.
What else do you have to do? Because that's one small aspect of it.
I have to pick one of the Lancaster real estate agents that I was referred to.
Okay.
I have to pick a Westchester real estate agent.
Okay.
And I have
So
to
one of your
call-
rocks could be,
Well, those were my rocks.
yeah, it could be reaching out to real estate agents, right? And then you could break it down even more. How many people am I going to reach out to per day, per week?
Pick one.
Yeah, so that's easy.
Yeah. Just there's a little like ethical issue with the commercial real estate agent who might want to show you the property that you just mentioned.
Yeah.
And then if I'm also working with a residential agent, he might also want to show me the same property.
Yeah, you'll have an issue there for
So
sure.
I have to figure that out, and I
Right.
don't want to piss people off.
Yeah, I see what you mean. It's tough.
And I know real estate agents get a little prickly about these types of
That is true. That is true. All right, it seems like everyone was able to get it done pretty quickly. So now that we've looked at setting your goals, again, I know it's a short amount of time for 2023, broken it down into rocks, whether it's 2, 3, 4 rocks that you're going to focus on for the next 90 days. Now is the really fun part, in my opinion, but it's also the part that gets a bad rap. But in order for us to be like my man Walter White and make a lot of money, you got to put the effort in, right? You have to really focus on and be disciplined with your weekly and daily activities, right? Because Jim Rohn said just a few daily disciplines makes a big difference. I don't care what they are for you, but you really need to nail down what are those few things, whether it's 1, 2, 3 things that I'm going to do every single day, no matter what, 5, 6, 7 days a week. I don't care what it is, but what are you going to do to really move the needle forward? Because if you're setting goals and then you're setting rocks, but you don't have actionable steps to get there, you're not going to make it. You're just not going to make it, right? And we all do it because things come up, life happens, the dog gets sick, our kids get sick, we can't do this, we can't do that. But at the end of the day, if you time block an hour, I guarantee if you time block 1 hour for 5 days a week to do money-making activities, you are going to hit your goals. 1 hour. There's a great app that I just downloaded. It's called the Pomodoro app. I don't know if anyone's ever heard of it. Pomodoro, tomato. I think it's tomato in Italian, but it's a 25-minute timer. So you say, I'm gonna dedicate an hour to cold calling, right? You download the app, it's 25 minutes. You hit the timer, you're gonna make your calls for 25 minutes. After the timer goes off, you take a break for 5 minutes, right? Reset. And then it goes back to 25 minutes. You get back on the phone, make your calls, and then it's gonna repeat 3 times for 1 hour, right? So you're going to focus in chunks because you're breaking it down from 1 year, rocks, 90 days, weekly activities, daily activities, and then you're just gonna break it down to, I'm gonna make my phone calls to distressed sellers, multifamily owners, commercial property owners. I don't care what it is, whatever fits your goals, but I'm going to do it for 1 hour from Monday through Friday at 9 o'clock from 10 o'clock to 10 o'clock. No matter what happens, I'm gonna lock myself in my office. I'm not going to take any appointments from 9 to 10 Monday through Friday. I don't give a shit what it is. You're just going to focus that 1 hour, 5 days a week, Monday through Friday, Tuesday through Saturday, Wednesday through Sunday, whatever it is for you, and you're going to stay dedicated to doing that. Making calls, Facebook posts, creating Facebook and Google ads, whatever it is. But that is what is going to help you get to your goals, and that's what we're going to focus on for Section 5. So Section 5 are the weekly and the daily activities, because what you commit to and execute doing on a daily basis is greatly going to determine your income for the year, right? Your goals for the year, your investing goals for the year. How many properties are you going to wholesale? If you're going to wholesale 15, how are you going to do it? Well, you got to start somewhere. You got to start marketing to distressed owners, following up, setting times to follow up. You have to create Facebook ads or Google ads or door knock. Again, there's so many different ways to do it, but what are the 3 to 5 things that you can commit to now to execute on a daily basis for an hour, 2 hours a week? These are called money-making activities. Money-making activities are going to help you get to your goals no matter what. So it just takes some time to come up with 3 or 5 or 6 if you're feeling crazy. Mm-hmm.